Perfect. Well, I'm happy to kick off the speaker series. I'm Shay McGee. I work for the state of Maine in the Department of Economic and Community Development. I've been with the department for 4 years now, and I manage the tax incentive programs for businesses in the state. So the topic today is to present on the new Dirigo business incentives. This is a sector-specific tax incentive for significant capital investment or worker training. And I'll start with, just so folks can tune in closer or tune out a little bit, I'll start with the eligibility. So it comes down to industries, and the industries are identified by NAICS codes. And so you'll see it's generally the heritage industries: ag, forestry, fishing, manufacturing, supplementary to that, long distance freight transportation, which is between metro areas. So that could be within state. Then the newer, higher value industries: software publishing, data processing, computer design, engineering, architecture, and scientific R&D. So those are the folks who will be eligible for this credit. And if you have any questions on do you fit in that sector, you can always reach out to me. Also, the NAICS codes are available towards the bottom of this page at chapter 300. This is where the description and the eligibility of the program are, and they're right at the top. So these are all of the codes. They're pretty broad when it comes to ag, forestry, fishing, and manufacturing, and pretty specific for transport. And all of the other industries are quite specific. The widest berth in those first two industries. So to go back to, if you are eligible, here's what the benefits are. It depends geographically when we're looking at this capital investment credit. For most of the state, it's 10% on equipment, machinery, and building construction. It is a lower incentive for the lower three counties of the state. So that's York County, Cumberland County, and Saginaw County. When we're looking at capital investment and sort of what this credit is, it comes down to tangible personal property or new real property, which is why the term building construction is used. So if it's existing real property, something like land or purchase of an existing building, renovations, those are not qualified in most cases. Some renovations create new real property. It depends. That's really kind of comes down to the accounting of it. But the mechanism here is the depreciation, how these items are depreciated. So as the items are placed into service, you'll be able to claim them on your annual state tax forms for the Dirigo tax credit. The business will start earning, this is where the significant capital investment comes in. The business will start earning credit on the value of total capital investment in the tax year exceeding $50,000. You can jump in if there are any questions at any point.
Could you help me
yeah.
understand a little bit about the disqualification of investment that exceeds 50,000? Can you maybe like give an example?
So it could be cumulative of eligible business property. So if a manufacturer is purchasing two pieces of machinery. The first is 50,000 and the second is 50,000. So their total investment is 100,000. They'll earn, if say they're in Kennebec County, they'll earn 10% on the second 50,000 and anything else that would exceed that they would spend in that tax year. So
Okay.
$5,000 is the value of the tax credit for the $10,000 investment in Kennebec County.
So, however, if it was like 55,000 on one machine, would that still apply?
They could earn the tax credit on the 5,000, the
Got it.
10%.
Got it.
But it'd be lower,
Yeah,
but it would
that
still be
makes sense.
eligible. Yep.
Thank you.
Yeah. And that is an annual threshold, so that could lead to kind of understanding the program to line up with understanding how you're going to make those investments, because it could be advantageous to stack and if the business is able to. So the other benefit is $2,000 per worker completed a qualified training program. This piece of the incentive further incentivizes existing state training programs. So these programs usually have their own incentives as well. So it's in addition to and stacks with the existing worker training benefits that we have in the state. So there are 4 pathways. They're right here. The most flexible is going to be a training provided by or approved for funding from the Maine Community College system. In other words, the Maine Workforce Development Compact, which has been providing a $1,200 matching grant through funds from the Alphon Foundation for any kind of training for the workforce. So a business can stack that incentive, that matching grant, with the Dirigo tax credit. That being the most flexible pathway. Then things like the Maine Apprenticeship Program, on-the-job training contracts with the local Workforce Development Board, that's usually new hires. And then anything provided by any training, education provided by any college or university in the state. So those are the 4 pathways. Once you've picked, you could pick multiple. Once you've kind of figured out what your workforce needs and what trainings are going to fit that, there are 3 other requirements to note. The business needs to pay more than $2,000 per employee. This includes wages during training, and as well as training costs that can count towards that $2,000 that the business spends. Accumulatively, the worker needs to have at least 20 total hours of training. And that, again, that's accumulative over the tax year. And the third is the business needs to claim a minimum of 3 qualified employees in each tax year. So they need to be claiming at least $6,000 is one way to think about it. One thing that's really important with this program is the application and the timing of things. For your qualified training or capital investment to be eligible, the business needs to have their letter of certification in hand. And to get that letter of certification, they need to apply. So here's one link. There's a few, it's linked a few times on this page, a link to the application. And what this application is doing is really serving as an eligibility check to certify that the business is eligible to take the Dirigo tax credit. So what the business will be doing on that application, it's pretty simple, straightforward. It will be, it will identify the NAICS code. So that will be cross-checked to make sure they're eligible. They'll provide information on what the qualified business activity is, and then include investment information over the 5-year certification. So once that application is submitted, the turnaround is about a week and a half, and then the business can expect their letter of certification. And that's the green light to start making those investments that will be eligible for Dirigo. And that certification is going to last 5 years. So it's important timing to remember, if you are interested in this program, make sure that you apply before you're starting those investments. That's really all I have. There are a few links down at the bottom if you're interested in legislation and things like that. The rule, this rule again pertains to eligibility application process. 301 pertains to the Dirigo tax incentive credit. One thing I did just remember that I forgot to emphasize is this section right here. So what's really important is, as a startup, is to note that the Dirigo tax credit is refundable up to $500,000 per tax year. So that means if you've earned any credit under that threshold, and it's exceeding, the credit you've earned is exceeding your total tax liability, then you will be receiving a refund check, which is really helpful for especially startups who are working on building up that tax liability. So just wanted to highlight that as well. Any questions?
Are there any limits on the refundability component?
Yep, it's capped at 500,000 per tax year per business. It's a pretty high cap.
Got it.
Yeah. Then the rest would be a regular non-refundable tax credit, which has a carryover of 4 years. Total of 5 years.
I don't have any questions, but I think this is fantastic. I had no idea that all of this was out there, so it's very good to know.
Yeah, this program just launched at the start of this year, January 1. It replaces the Pine Tree Development Zone and employment tax increment financing programs. And really, the spirit of this new program is simplification, trying to make it as easy as possible for the business to, one, understand what the benefit is to them, and simplifying the application and reporting process.
Shay, I do have a question. So the investments into the business are investments made like by the business or the business owner, correct? It's not outside investments. That's what my program is. So
right. So yes, so it has to be investments in tangible property, and that property needs to be placed in service by the business, needs to be depreciated by the business that is certified.
okay, so it's reaching. Okay, perfect. Thank you.
Yep.
Are there any other questions from anybody?
Jay, if we have businesses that have questions about this, should we direct them to you, or is there like a general email to you?
There's a general email on this webpage, but you can also email me directly. I mean, I'm behind both of them, both the general email and my own. So feel free to contact me either way.
Perfect. Thank you so much.
Yeah, thank you. This was awesome.
You are welcome.
We appreciate you taking your time.
Yeah, I'm happy to be here.
No, sorry. This mouse is all over the place right now.
Yeah.
Okay. I need to.
I'm not sure why it's doing this
I don't
screen thing.
either.
I would just try to put it in present.
Okay. No. Now it's not sharing the right screen. Here we go. Okay, so now we have Michelle with Fame. If you just want to let me know when to switch slides.
Yeah,
I
I'll
can do that.
introduce myself. My name is Michelle McKenzie. I work with the Finance Authority of Maine. I've been with Fame for, we're going on 21 years now. I've been working with the Seed Capital Program since all the time I've been at Fame. We can go ahead and just get right into that. You can go to the next slide, the first slide, please. Yeah. Can you go back one?
Oh.
Anyway, actually, it should be maybe one more. What is it? There we go.
There.
Okay, so the Maine Seed Capital Tax Credit Program is an investment program that provides tax credits to investors to apply to their Maine tax liability. So an investor can invest, there are limits on what they can invest, up to $500,000 over 3 years, but they would invest in an eligible or pre-qualified business and earn a tax credit on that. They have to apply for that credit, and Fame issues a tax credit certificate that gets applied to your Maine tax liability. There are some limits on how it's applied, but that's for another conversation. I'm gonna go high level. So that's basically what it is. So it can be individual investors, as long as they have a Maine tax liability, they can use the program. We also approve credits to private venture funds that are eligible under the program rules. And those venture funds actually would get a refundable credit. And I think there's more about that later in the slides. Just as some history, between 2021 and 2024, we've issued over 22 million in tax credits. Approximately 33 participating companies every year, which that 22 million was from 56 million of qualified investments. And then besides those investments that were eligible for tax credits, 420 million was raised by these participating companies. So it's really an incentive for these companies to receive equity into their business for tax credits.
Are you okay with taking questions?
Absolutely.
Yeah, so I've got a couple of questions. The first is when we're talking about venture capital, syndicated organizations. My understanding is that it's for them, they can claim this even if they're outside the state.
Correct. So if they're outside the state, they can apply for a tax credit. They have to meet the eligibility requirements as a fund. And we issue them a refundable credit. So they take the credit the same way. So as an example, they invest $100,000 and their fund has however many investors. We issue a tax credit for $40,000. What the fund does is each year at tax time, they have to submit a form to Maine Revenue Services for 25% of that credit. So it's $10,000. And then Maine Revenue Service wires them that refund.
So it's a lower, right?
Well, it's a $40% credit, but you can only apply the credit, 10% of the credit each year for 4 years.
Could you help me with this?
Yeah. This is really, it's confusing. So again, we issue a $40,000 credit, and whether it's to a private venture fund or to an individual. So if it's an individual, that individual can take $10,000 toward their tax liability each year
Okay,
for 4 years. So the credit has to be spread over a minimum of 4 years.
okay,
But when you apply that credit, it can't be more than half of your total tax liability.
okay,
So if you're going to apply $10,000, but your tax liability is only $5,000, you would only be able to apply 2,500
okay.
of the credit. But that credit can go over 15 years. It can carry forward for up
Okay,
to 15 years.
okay.
So you don't lose that credit.
So,
You just have to. I brought this with me. You can
Oh, yeah.
look at. You
Yeah,
can
you
look
can
at
go
that.
on.
That's just an example that I.
yeah, no, this is really, and so my original understanding was that, if it was someone from out of state, that it was less than 40%, is that incorrect?
If it's somebody from out of state, if
It's an
they,
organized, like a venture capital from out
a
of
venture
state.
capital, no, it's still 40%. The 40% credit, that happened in 2020 when a bunch of rules changed. So everybody gets the 40%
And then-
credit.
And then for them, it is dispersible amount, right? It's not something they claim on grant.
Correct. So what happens is they get their, say, $10,000 back. That fund has two options. They can either reinvest that money as they see fit, or they can prorate it and give it back to the investors in the fund as a cash rebate.
Okay,
But the fund can make that choice.
right, but they don't have the limit of it can't be more than, 50% of their
Correct.
tax liability.
Correct, because it's a cash rebate.
Yeah, yeah,
Yes, and as a private venture fund that from out of state, it doesn't have any tax liability. So they just automatically get
right.
the 10% of the credit issued.
That's very helpful. Thank you so
Yeah,
much.
you're very welcome.
Actually, I do have one more question. This is a lot easier.
That's okay.
So you say average 33 companies per year. Over the past years, have you seen it increase or decrease or change?
It varies every year. We have new businesses that get approved every year. Some businesses will do a funding round for a couple of years and then they don't do it for a couple more years. And then they'll come back and do it again. So it does vary on who the businesses are that are receiving it. It depends on what they're doing for funding rounds. Because they do have to have, your investment documents, whether it's a stock purchase agreement, a convertible note, or a safe are the primary ones that we usually see.
Okay,
Yeah.
thank you so much.
Sure.
Question.
Okay.
So in the first box there, it says the cash out fee provided to a business.
Correct.
There be businesses that are not eligible to receive investments.
Correct. So
That's the next
Let's-
slide.
let's- let's go to the-
Wait,
let's go to the next slide. Uh, let's see.
Just have-
So let's, yeah.
Did go to the next slide.
Okay, so the business must apply first. So if a business receives an investment and is not eligible for the program, that investment will not qualify for a tax credit. So the business must apply first.
it has to be, they can't be, oh, they made an investment, then go back and do it.
Correct, correct. No, because when we issue the tax credits, we require a copy of the investment documents and evidence of that transaction. So if that transaction happened before the business was approved, we don't,
So it's apply and approve, right?
Right, so the business applies first. It has to be a Maine business. It has to be either a manufacturer, a provider of goods, 60% of goods outside of Maine, with a majority of employees in Maine. Develop or apply advanced technology, added value natural resource, or a visual media production company. So some businesses can check off more than one, but you only need to meet one of that criteria. The big thing that seems to be a little bit of an issue for us right now is with all this remote work, it's very hard to determine if it's really a Maine business. I think I have a slide on it. looks like I missed a slide, but I'll explain.
Are you looking for this one?
Yeah, no, I
Oh.
I was just gonna go into the business. The business must have a physical location in Maine. It needs to have a valid Maine address. It needs to have the majority of their employees living and working in the state. So what we look at is if you've got 10 employees, you need to have at least 5 of them in the state of Maine and the other 5 in various locations is kind of the guidelines. We are working on some rule changes for this program that are going to be a little bit more specific in eligible businesses because it is, people will say, oh, I have this address, but they're really in New Hampshire. So we kind of have to vet that. So once the business is approved, and when to approve a business, we need an application, a business plan, financial reports, if they're in business, previous year and year to date. If not, we like to see 5 years of projections and a copy of their certificate of good standing. And then the program manager reviews that and determines if it's an eligible business. Once it's deemed eligible, I send a letter to the company saying, yes, you can go ahead and accept investments, and we can work with those investors after they make those investments. So on the investor side, an investor must own less than 50% of the business and not control the business. So if it's somebody that's like a consultant that's making an investment, but they are helping control the business, they wouldn't be eligible. The principal owner and spouse are not eligible for any credits. Immediate relatives, we will allow them a credit on their initial investment only. So if they make one investment and they get a tax credit, then they're done. They can't make any more because investors do invest in some businesses more than this. You can invest up to $500,000 in any one business in a consecutive 3-year period. Venture funds can invest more. However, we get an investor list, and any one individual investor into the fund can exceed $500,000. So those are all things that we review. And the investment must be at risk for 5 years. So if it's a stock purchase agreement, that's straight up equity, that's no problem. But if it's a convertible note, the maturity of that note cannot be less than 5 years from the investment date. If it is, we say no, that doesn't qualify, and they would have to do an amendment for 5 years. Or they can wait till the note converts to equity and then apply for the credit then. So you can go either way. You don't lose out on the credit, but if you don't want to wait the 5 years for it to convert, you have to wait until it converts to apply.
So
Does that make sense?
yes, so how does that play into what you were saying about when you say apply here, it would just be to get the credit, not to get approved as a business, right?
Correct. So there's the business eligibility, and then the individual investor eligibility, and then a private venture fund eligibility. So there's 3 different applications for the different types of.
But I mean, for the one where you said, for example, the convertible note, right?
Yep.
You said they would have to wait for maturity, but they can do the deal up front, they can get approval from you up front. They just can't claim that credit until the maturity.
Right. If the convertible note is less than 5 years and they don't want to change it to a 5-year term, they would have to wait to apply until it converts.
Got it.
And then what we would need to see is that original convertible note, and then we would need to see the conversion documents.
Got it. Yes, that makes sense. Thank you.
Okay.
So just say in the crazy case, there's like serial investor out there and are those limitations? So they've invested in 5 or 6 different businesses that businesses need. Are those investor limitations per business that
Per
they.
business,
per
yeah.
business.
So we have some investors, there's not too many, but there are some investors that meet that $5,000, $500,000 over a 3-year period. But they could invest 500,000 over the same 3-year period in another business if they wanted to, and then they get that credit. They would have to have a very large tax liability to apply all that, but it is definitely possible, absolutely. Okay, let's go to the next slide. Oh, this is a slide I was looking for. What qualifies as a main company? So it's a physical location, the residence of the CEO or the senior team members need to be in Maine. Employee location, majority in Maine. And we also look at relationship with other Maine firms. Where is your manufacturing facility? Or where is your your warehouse? Or do you use an attorney or an accountant or whatever in the state? So we're looking to make sure that most of what we're investing in is in the state of Maine. Limits on investment amount. So any one business can receive up to a lifetime amount of 3.5 million that would be eligible for tax credits. And that is limited to 2 million every year. So we track the amount of the investment and the amount of the credit, and I track it for each business. So I know where they are in that, whether they're going, if they're at 1.9 million this year and somebody invests 200,000, we would only be able to do a credit on that 100,000. We can't go over that. All of the tax credit certificates are sent to Maine Revenue Services for verification, because if you put on your tax return that you have a tax credit and Maine Revenue Service doesn't have a copy of that certificate, they're going to call me and ask me, did you issue this? And I'll be able to say, yes, and I sent this to you, but I can send it again, or no, they didn't. And then it gets kicked flat. Right now we have a limit on credits, $15 million a year. In 2027, that is going to drop down to $10 million in a year. Past few years, our credits have been rather low. Investments have been a little slow. I think the economy has a lot to play in that. For previous to 2020, the annual limit was only $5 million. And we had, I think it was 3 years that we had people lined up at our door on January 2nd to get their applications in so that they could get tax credits, because that disappeared. Well, on January 2nd for 3 years in a row. We had to prorate credits because there were so many investments that we had to keep it within the limit. So it's yeah. But the 10 million, once it drops down to 10 million, I think that's even still fine. Our past few years have only been maybe 5 or 6 million in credits.
When we talk about the Maine residents, that there's no inclusion of their personal tax liability to.
We don't know their tax liability. We don't care of their tax liability. When they apply credits, FAME is not allowed to give any tax information, so we can't tell you how to apply that. You'd either need to go to a tax professional or call Maine Revenue Services. All we do is review the applications and issue the credits, and then let Maine Revenue know when those credits are issued. Okay. So this slide here is the 3 different applications: individual, business, and private venture fund. So the question, can out-of-state investors use the program? Yes, but they need to have tax liability. So somebody in Massachusetts that has some sort of a business in Maine and pays Maine tax liability would be able to invest and take that credit. Otherwise, if you don't, you would be part of a private venture fund. You could then invest that way, but that's not going to guarantee you a refund. So the applications, first, the business eligibility application, the business needs to apply first, followed by each investor submitting a separate application. So for each investment, we need a complete application. So if you invest this year, you submit an application and you invest in the same business again next year, we need a complete application. Processing is usually 1 to 2 weeks. It varies depending on the complexity of what we're looking at. So that's really all I have on the seed capital program. Let me just look at my notes here for a second. I have
Thank you so much for that, and for our team and for us, nice seeing the images of those 3 different forms, right? The
Yes.
magical documents that
Yeah.
are starting to look at. And for such a powerful program, they're pretty easy to navigate, I think. I'm sure you hear a diversity of opinion on that.
I do.
But generally speaking, this is a great program.
It is a great program.
I touch on, and apologies if I missed at the onset, some of the reporting on the back end, what that looks like and what folks should know about with regards to reporting before applying, especially for that smaller startup or that more nascent business, but they may not have a finance department yet. And the
Right.
reporting is important.
As far as reporting, we don't require too much reporting from anybody. We do all the reporting. And it's, so the business, we basically look at their business plan and their financials, current financials or projections. Just to make sure that, yes, it meets the 5 different criteria. It's a viable business. It looks like it's gonna do great things, and yeah, let's approve them and help them do great things. Other than that, there is some reporting. I take that back. Annually, every business that is approved does have to complete an annual report. It is something that FAME will send to each business individually. They have to report their revenue, their payroll, their employees, where the employees are located. It used to be only 6 questions and now it's like 15. So there is some reporting, and if the business doesn't submit that report in a timely manner, we can disqualify them from participating further. Especially if they've received credits. They've received credits, we need to have that. And we're good about following up and saying, we need to get this. Because once we receive all those reports, we have a very comprehensive report that we have to send to legislature outlining all of these little details, all the jobs created and retained and all of that. And if,
Thank you.
yeah, and if somebody invests more than the $500,000, we'll say, they can invest more, they just can't get credit. Covered that, okay. Complete application. Applications can be emailed to FAME. Right now it's to me, but we're going to be updating our website to be emailing it to a different email address at some point. And then there's a fee with each of these applications. The fee does have to be mailed to FAME. We don't have an electronic way to collect fees. We have a lot of electronic way of collecting loan payments, but not fees. So it does need to be, we administer over 40 different programs at FAME. So we need to get those with a copy of the application so we know where the money goes. So yeah.
Thank you.
Sure.
One other quick question, I think for the startup community of small businesses, thinking about the first come, first serve, make sure the application relative to the annual state cap on 15 million. How are you guys just generally feeling about that cap? I know it's generally not an issue.
Since it was raised, it's not an issue. When it was only $5 million, yes, it was an issue. But by raising it, we eliminated that. And like I said, the past few years have been very slow in investing.
Yeah.
I think this year, so far this year, maybe only $5 or $6 million in credits have been issued. And we have up to 15, so we've still got a long way to go, so we can still take those.
Thank you.
Yeah, so I don't know if anybody's interested, but the next slide, I just have a few, just an overall of what Fame does. For businesses, we provide commercial loan insurance to lending institutions, so a business can apply to any local lender. If the lender is a little uncomfortable, they can ask Fame to insure that loan. So we're also an insurance company. We do direct loans for businesses that are unable to secure traditional financing. We're what we call a lender of last resort. So if you can't, we can try to help. We've tried hard to help everybody. We also administer loans on behalf of the Department of Agriculture, and we have other direct loan products for a convenience store that needs to remove their gas tanks and replace them, or things like that. So we have a variety of business options. Education, we do loans for higher education. We provide financial literacy for all ages, starting with elementary right up to high school. We also do training, FAFSA training, and individual assistance for anybody going into college. And then we also administer the state's 529 college savings program and the $500 Carroll Belt Fund grant main fees. So yeah, we have a lot of variety. And we do cover, we'd like to say we cover from babies all the way up to your business. And we can help somewhere along the way in a variety of different ways.
That's awesome.
Yeah. And the last slide just has my contact information, as well as Jonathan Poole, who is our director, our chief operations officer.
Thank you.
So yeah.